Something strange is happening in America right now. While most people are stressed about inflation, rising costs, layoffs, and uncertainty, a small group of investors are quietly using a strategy that flips the entire system upside down. Most people spend their lives asking banks for money. These people do the opposite. They become the bank. And unlike driving for Uber until 2 in the morning, or constantly chasing risky internet trends, this strategy has existed for decades. Today, we're exploring one of the most overlooked wealth-building strategies in America: private mortgage lending. Or more simply, becoming the bank. And by the end of this video, your perspective on passive income may completely change. Let's talk about why many people feel financially stuck today. Maybe you have money sitting in a savings account earning 4 or 5%. At first, that sounds good. But after taxes, rising costs, and inflation, the gains can feel much smaller. Then there is the stock market. Some people love it. Others struggle with the emotional roller coaster. One week, everything is up. The next week, headlines create panic. For many people, it feels unpredictable. So where do many wealthy investors place their money? Real estate. But not always in the way most people think. Imagine a real estate investor in Florida named Mike. Mike finds a house worth $200,000. But because the property needs repairs, he can buy it for $150,000. Mike knows this could be a great opportunity. But there is one problem. He needs money quickly. Traditional banks often move slowly. Paperwork, approvals, waiting. And by the time the loan gets approved, the deal may already be gone. So Mike looks for another option: private lenders. Ordinary people willing to lend capital for real estate deals. People like you. This is where private mortgage lending works differently. Instead of buying the property yourself, you become the lender. You fund the deal. And in return, you receive interest payments. You do not fix broken toilets. You do not manage tenants. You do not answer late-night calls. You simply provide capital and collect returns according to the agreement. In simple terms, a buck area become the bank. Let's keep the math simple. Suppose Mike needs $120,000. You agree to lend the money at 10% interest. 10% on $120,000 equals $12,000 per year, and many of these loans are short-term, often 6 to 12 months. Meaning your money is not locked away for decades. After the project finishes, payments people finally receive your original investment back, plus interest. Then the process can begin again. This is one reason many investors explore this strategy. Now you may be thinking, what happens if the deal fails? This is where many people find private lending interesting. These loans are usually backed by physical real estate. That means the property itself serves as collateral. Unlike some investments that exist only on a screen, there is a real asset involved. Of course, every investment carries risk, which is why experienced lenders focus heavily on due diligence. And this brings us to the part social media often skips. This is not magic. And it is not guaranteed money. Number 1. Your money may be tied up for several months. You should never invest money you immediately need. Number 2. You must research carefully. Experienced lenders often avoid lending too much compared to the property's future value. This creates a safety cushion. The strategy matters, but discipline matters even more. Most people spend their entire lives borrowing from banks. But some people eventually realize something important. The people who truly understand money often think differently. They stop asking and start becoming the lender. If you're interested in AI, business, money strategies, and future income ideas, subscribe to Biztory Finance. And let me know in the comments, would you ever consider becoming the bank? I'll see you in the next video.